Investors and traders, welcome to the channel. Today is 7th of April 2024. I hope everyone is having a great weekend. In this video segment, we are going to take a look at the Forex market. We will mainly focus on the US dollar index. We will then take a look at the key currency pairs such as the euro versus the US dollar, cable, which is the British pound versus the US dollar, Japanese yen versus the US dollar. We'll also take a look at the loonie, which is the Canadian dollar versus the US dollar, and the Aussie dollar versus the US dollar. I think we'll be able to just cover these main markets for this video. So I'm trying to do something a little bit different where I'm trying to cut the videos into different segments. This way the stock indices video that we do will be shorter because the videos are getting really long. So this way it's an attempt to break those down. So please do let me know if you like this format or you want to see this in a longer format. I believe this one is a little bit easier because it will be condensed per subject, and then we can reference these videos. As always, this video is for educational purposes only and is not a financial advice. All right, so with that, what we are taking a look at is the daily chart of the US dollar index, and the dollar index has been pretty strong since the beginning of 2024. It has gone through some retracements, such as, for example, this channel, and we had a very nice 1-to-1 ABCD price projection here, coming down right into the 14th of March. Then we have seen a move higher. So when we were looking at this video or this market last week, the market was we had a pattern formation that we were watching for this market to have a resistance possibly coming around the 78.6% retracement. So that's the around 104.35 level. So we have this ABCD also completing around here, but following Monday we have seen actually a pretty strong move in the US dollar. This could be related to due to a number of things, maybe something to do with geopolitics as well, and the US dollar is also a safe haven for that kind of an event. But we have also seen these strong moves get terminated as well. So for example, on 13th of February 2024 we had a really strong move higher, and then we saw an inside bar formation, and then we saw a market pulling lower. So it was actually a terminating move, and what we saw the following day was not a follow through, and the market actually consolidated around here, and this is a double top formation. And now what the market is, it just pulled back right into this we can draw a trend support line around here, and also it's not a perfect trend line because you know, there is some overlap, but I do like to see an overlap as well. And also the key thing is that this market actually closed right at the 38.2% retracement at 103.90, and last Friday we had the FOMC, we had the non-farm payroll numbers come out, so there was quite a lot of volatility in the market. Nonetheless, the market actually closed positive with a really long wick, so it's not a really very strong looking candlestick pattern because there was a lot of fight. The market was much stronger, and then towards the end of the day gave a lot of its gains back, but it closed above the 38.2% Fibonacci retracement. So now what is setting up is a possibility that this could potentially be a pretty good resistance level and a double top formation as well. And what could happen is that if the market closes below this trend line, so a break of trend line could mean a continuation of the move lower for the US dollar. And if you look at on the left hand side, this is where we see that in fact the market had been going lower before finding a really good support around this 99 level, or roughly 100, and we'll come and take a look at this on the monthly chart, what that level is. It was a really key level that we have been watching. And here this could be just a retracement, and we could have a continuation of the move lower, but the US dollar will only, in my opinion, move much lower if the 99 level is broken to the downside in a really convincing manner. So we are way above that for now, but it could mean if this trend line is broken, that one A, B, C, D to the downside might in fact be in progress. So really key levels coming up for the US dollar next week. So this market will be a key market to watch. Now, taking a look at the weekly chart, here what we have seen is this blue line is with a question mark, and that again all depends upon how this market pattern is actually unfolding. As we have seen on the daily chart, if the market begins to move lower, then the chances of this low being retested, and especially this low around this 99 being retested, is the likelihood of that will increase. So in fact begin to go and test the bottom of the range. So if you look at this, it's a pretty wide range, but the dollar index has in fact just been trading in a larger trading range. Alternatively, if this potential double top 104.88, 104.90 level is broken to the upside, then this 1-to-1 price projection suggests that it might in fact go and test this upper range around the 107 levels. That's also a possibility, and above that 108.75 is also a possibility. Again, all really depends how the market is going to trade, whether that trend line will be in play or whether it'll get broken to the downside or the upside. So we'll have to wait and see. Okay, now moving to the really long-term monthly chart. So just a recap on this, what I really want to show is this concept of market symmetry. So going back, really back in the early 1990s, that's when a dollar really started a bull move for it, and it came and retested this several years later, and then it rallied for 10 years, so quite a long period of time, and then it topped, and then what we have seen is the top coming pretty much very close to the dot-com bust, and when the bubble burst and a recession began, and then it just kept on going lower, and then we have seen a recovery in this market taking place around 1st of April 2008, so in the throes of the great financial crisis. And then again a double bottom formation, very similar to what we have seen in the early 90s, the middle of mid 90s, and then a move higher, which is approximately 12 years. So 10 years from the 1990s to the early 2000s, and then from 2008 to when it topped around July of 2022 is about 12 years. So longer term view is that the dollar index or the US dollar might have in fact topped because of the symmetry that we are looking at it. However, it doesn't mean that the dollar cannot rally. In fact, we could have really fantastic rallies in the dollar. If we look at this just as an example of what we are viewing, we have seen fantastic rallies which went and in fact challenged these highs, but they were not able to take those out, so formed a double top formation and then a massive decline lower. And here what we are seeing is, after hitting the level of 99.10, which was an exact 61.8% Fibonacci retracement for a number of quarters. So this is in fact a 3-month chart, so it's a quarterly chart. Each bar represents 3 months. We have just seen the market go sideways. So in fact, that shows a pretty strong support level around the 99 level. So this is why I keep on saying that the US dollar, the weakness will only come in, or will be when it will begin to decelerate, in an accelerated fashion to the downside, will be if and when the 99 level is broken to the downside. So far, it's just holding it and it's in a trading range, and this is what we see on the weekly and the daily charts. All right, so after covering the US dollar, let's actually move to the Euro USD. So Euro USD is about 51% of the dollar index. So sometimes it just really comes as a mirror image, but however, it's a different market. And what we have seen is with the strength in the US dollar, of course, we are seeing a decline in the Euro USD, and we have seen a really fantastic pattern formation, which exactly caught the low around here. A number of things coming together, 1.272 expansion and 78.6% retracement, and the market since the beginning of 2024 has been just moving lower, and what we have seen is a move in an absolute beautiful ABCD formation right at the 61.8% retracement, and just the market began to move lower. Now last week, I'll just move down to the four-hour chart. What we were watching for was this pattern formation around here, which is around 107.90 level, because we had this really nice ABCD pattern completing around here, and right at the 61.8% retracement as well. However, that pattern failed. Now, one of the things about these patterns is that they do fail, but when they fail, the feedback is pretty immediate, because when it began to go below this low, we knew that this pattern in fact was not going to work, and it did rally for a little while. In fact, a pretty good amount of pips. It went above about 60 pips, 65 pips, but then right here, this is another way to look at it, is if we just look at the rally, the rally just went to exact 38.2% retracement, and after the low of this wick was of this candle was taken out, chances were that in fact it was gonna go a little bit lower, or what we were expecting, that pattern might have in fact failed. So the 38.2% retracement was in fact was an early clue for us. Now what the market did was, let me draw it another way. It went and created another ABCD pattern formation. So let me draw it like this. I'm going to make it a little bit thicker so it's easier to see. Maybe even change the color, so make it blue, and we just copy and paste, and we have to paste it from here. So that in fact became a nested ABCD within this bigger structure, and this is what we saw on Tuesday. The market really hitting that level, and where it is now is very interesting, because if we just take the retracement level from the top of this structure, bring it lower, so it has gone above the 38.2% retracement. That's good. In fact, it's right at this, very close to the 61.8% retracement, and towards the end of the day, it actually closed a little bit lower. So it's setting up a very interesting pattern formation. So this channel that we see, we have 1, 2, and possible the third touch around here. So just the way we have seen the trend line on the dollar index, this is a trend line for the Euro USD. So what it means is that if the market is able to break above it, then the chances are that what we have seen around here, this low and this low, might have in fact been a double bottom, and looks like the euro might actually rally against the US dollar. Further, we'll check by drawing a retracement what this low was. So this low was about 50%, so it actually retraced a little bit deeper into this range, and from here the 4-hour candle was in fact positive. So unless weakness come in at the open on Sunday evening at New York time, we'll have to wait and see, but the chances are that this level might have actually held. So again, really watching for this trend line. If the trend line is going to break, then the chances will become that in fact we might be looking at a formation where the market might go and challenge at least these highs around 109.80, and might in fact the euro begin to rally higher, or the weakness will come into the US dollar. So this is for a euro, and here we go. I am going to remove this wedge kind of a pattern formation, because that did not work out. Also delete this one, and I will leave this ABCD right there. Okay, with that, let's take a look at the GBP USD. So this is a daily chart of GBP USD. Now this one is really interesting. We were watching for this 78.6% retracement on the ABCD as a pretty strong level of support to come in. This was the pattern that we were watching, and what we have seen is the market actually for a number of days. So one, two, three, four, five. That's one trading. This is one whole week. Actually, it's one trading week. Just market goes sideways. So it's pretty strong level, but on Monday, just the way we have seen it on the Euro USD, this really bearish looking bar broke below that. So in fact, that pattern, in my opinion, was invalidated. However, if you look at this is also in a trading range. This low was held, and what we have seen now is this market. There's a lot of volatility in this market. In fact, basically rally right back to, I believe, which is the 38.2% retracement. So let me actually draw this like this. Here we go. Yeah, there we can see it's very similar to the Euro USD, right at the 38.2% retracement. So we have a number of things. We have the third point here as well. So let me draw it like this. There is overshoot, which is fine. So I think the way it is setting up now is like this. We have this structure around here, which is the bottom of this range. You can call it double bottom, triple bottom around here, and we have this descending trend line right at the 38.2% retracement. So if the market is able to close above, and especially on a daily chart, if on a 2 consecutive closing basis, 1.2675 above that, then there is what would indicate is that this might in fact has been a pretty good bottom, and we could see this market accelerate and probably go and test these highs around 128.90 level. That possibility will be there. Now let's take a look at this one quickly on a weekly chart. So what we can see is that this market has been outperforming this low in September of 2022. This 382 is really holding. It's pretty strong. In fact, it's getting stronger now, although we have this bearish symmetry in play, but the market has been pretty range bound, and unless this level of 120 is broken, which is 38.2% retracement to the downside, this market looks that it might remain in this range for some time, and might in fact get stronger, and might in fact break this symmetry, just because if you look on this weekly chart, the number of weeks and months has been in this trading range. So it looks like if the weakness in dollar will come in, the GBP British pound is likely to benefit out of it. And with that, let's take a look at the Japanese yen. So the Japanese yen is the most interesting market. This is what we were discussing when we did the video last week, to watch for this this level around here. That's been a double top formation here, and might in fact be going for a triple top. Now there's a lot of chatter in the markets that the Bank of Japan is likely to intervene in the markets and to support the Japanese yen. So that there could be some reason for it. That what we have seen is this kind of a trading range which has been going on for over a week in a currency pair, which is, I believe, the world's second largest trading pair in currencies from a volume perspective, it's quite unbelievable stuff what we are seeing there. But there is a possibility that we have this upward channel here. The market could in fact move beyond 151 right into 152 and above, and try to test the top of this one. And if, let's say, if there is gonna be a move to the upside, let's take a look at the expansion of this one. And let's see what we can see. So this is for shorter term, right? Shorter term move. Then yeah, of course 152 and beyond that is 153.50. And I believe we'll also have a 1-to-1 price projection here as well. So let me copy this around here. So we have actually in fact already seen that one. So 152 is really one there. So really watching this one, I believe from a trading perspective, this one is a pretty hard one to trade at the moment, because just being range bound. And looking at this on the weekly chart, there is quite a lot of pressure or building, because what we can see is rising trend line around here, that there is a chance it might actually take this 152 level out to the upside. So chances seem to be more on to the upside for this one. Okay, let's take a look at the Aussie dollar. All right, so this is the excuse me, the daily chart of the Aussie dollar. And one thing is visible in this one is also it is range bound as well. The Aussie dollar is range bound, and we have this wedge formation here. You can also call it a triangle formation. We have a bottom here, and of course there was a bottom here as well, or you can even take a look at this bottom. So there is a rising or higher lows. At the same time, we have lower highs as well, and especially if we look at the shorter term, 1, 2, 3. So this is the trend line here. Now if it is able to break above this descending trend line, breaking it, then we could be looking at 1-to-1 price projection, which could go and see this as high as 67. That's the 61.8% retracement from these highs to these lows. And then right above that, we also have the 1.272 expansion. So this level is gonna be probably a pretty strong resistance level if it gets there. But then it would also mean that this wedge has broken to the upside. And normally the thing about the wedges is when they break, they rather break spectacularly. So it'll be interesting to watch and see what is likely to happen. Same applies to the downside. If it is broken to the downside, breaking this trend line here, then the 78.6% retracement comes in around 0.639. So that's gonna be really interesting to watch. This market is range bound, but the patterns still do exist within this range as well. So I believe it's really for shorter term traders, which can take advantage of the volatility on the shorter time frame. So you can see there was a nice ABCD, not a 100% exact ABCD, but right in that ballpark figure, right in this bottom formation as well. So it just challenged the bottom of the range, and now it's testing, or could go in fact and challenge the top of the range as well. On a closing basis, if it just breaks this trend line, and then we are looking at 67 level in the Aussie dollar. Let's take a look at the loonie, which is the Canadian dollar. It's not a very nice looking chart to be trading, in my opinion. It's just my opinion. I believe it could also be because there is a fair amount of correlation which exists with the oil market, so that's crude oil, and we have seen a lot of choppy price action here. There are some 1-to-1 price projections here, and last Friday it went right to the 61.8% retracement. Honestly, it's not a favorite chart of mine to be trading. If I were to trade, I'll pick some easier market, which is trending, and here is just pretty large trading range in my opinion. And yeah, if it breaks out of this, we are looking at 78.6% retracement there. But the chances are this 61.8% retracement on 136.20 might have been also a pretty strong resistance level, which could see the market rotate lower, but there's no confirmation for it. It'll only come when these lows around 134.20 and possibly even 133.60 they are taken to the downside. But the chances, in my opinion, are increasing that the Canadian dollar is actually likely to get stronger against the US dollar. We'll have to wait and see. So thank you very much for watching the video. Apologies again, the video got a little bit longer, but we were able to cover more of the currency pairs as well. So thank you very much. Have a great weekend, and I will be doing more videos for the gold market, a separate video just for gold. I will also take a look at the silver market and also some of the gold stocks as well. And then there's going to be a separate video just for the US stock indices in the bond market. So thank you very much for watching. Good luck and good trading. Speak soon.